Good afternoon, everybody. I hope you're feeling good. Your tummies are filled with food already, or if not, we are the one panel between your lunch. But very happy to see all of the people here, and I'm super glad to have this excellent panel discussion with me here tonight, or the panelists. In the panel, we have Jan Olsson, who is the investment associate at Extantia Capital, where he's deeply involved in the investment decision process. He holds a master's degree from the University of Oxford and has a background in economics and public policy. And before joining Extantia, Jan worked as a project developer for grid-scale battery energy storage. It's very glad that we can have Jan here. We can give a warm hand of applause. We have Ms. Yvonne Slingenberg, who is the acting deputy director general of DG Klima and director in DG Klima for strategy, analysis, and planning. That's a mouthful. Give her a warm hand of applause. Yeah. And we have Roni. Roni Hiranand is the principal at Google Ventures, London-based investor, works with early and late-stage companies across enterprise software, frontier, and climate. Very glad to have you here as well. Let's give her a welcome. And my name is Erkki Ani. I'm the founding partner at Sunly Future Ventures, where we are doing early-stage cleantech investments into the Baltics, Poland, and Finland. And today we are actually launching at the same time that we have our panel. There's a startup called Capitalised who is launching their pilot production facility, a container. I was just there talking with them for a second. Well, essentially, they're turning CO2 into nanographite that could be used in batteries or energy storage in general. I think it was about time to have large-scale containers on the Latitude59 food court. That's a very good timing, I would say. The question of FOAKs, or the first of a kind, has been popping up lately quite a lot, especially among the VCs that see the potential, see the impact and the opportunity in investing in it. And now we're going to dive deeper into why we're actually doing that. So I have a few questions. First individual, then we'll dive into more of a discussion. Let's start with Yvonne, from the European Commission side, from the policy regulations. Considering that the EU's aggressive targets for reducing carbon emissions, how does the Commission view the role of FOAK technologies, or the first-of-a-kind technologies, in achieving those goals?
Thank you, Erkki, and excited to be here. Super nice setting, getting us out of government offices, etc. So very happy and excited to be with you here. You said EU aggressive targets. Yeah, you could call them like that. I think what I would like to convey to you is that indeed, in Europe, together, we have said we want Europe to become the first climate neutral, so no CO2 emissions or other greenhouse gas emissions, and climate resilient region and economy by 2050. We have milestones. We have a very important regulatory package that has been agreed the past years for 2030. And I'm here also today to say that this transition is happening. We will be staying the course. I suppose you also all know that in a few weeks we have European elections. Now this is important because we need all our politicians and members of European Parliament to kind of be on board for that transition. But I think what you're doing here is absolutely tremendous in order to give them the confidence that, yes, the transition is happening and this industrial revolution, which I think was the lady opening the panel, is on. It is on in Europe, it is on in the world. I think we see other continents also getting very, very active in this. And of course, the technologies and the first of a kind, showcasing all kinds of different approaches, all kinds of different low carbon solutions is absolutely key in order to get there. And this is, as far as I'm concerned, an interaction between setting a regulatory framework and a policy framework, including funding instruments where we have them at EU level that can support these first-of-a-kind startups, and to then also indeed showcase that, yes, the technologies are there, we're scaling them up, and we can move forward with our aggressive targets, as you call them. So we have measures, we have rules, and we have instruments, and I just want to highlight already in my introduction that we have what we call an innovation fund, where we do support breakthrough technologies, of course looking at the most competitive bids, those that are technically and financially viable. That is a public support instrument. We also do auctions. so that we get the best price for EU-level money, taxpayer money, if you want. But very much also we're keen to work together with the private sector in order to see private financing, because we know that the level of investment needed in order to get to this climate-neutral world is so high that we definitely need to make these instruments work very well together. And as I said again, the regulatory side of things plus the funding side, and that is public and private. So very happy to be with you.
It sounds very complex. It is complex as well. But we're talking about FOAK, right? First of a kind. What is actually a first of a kind? Jan, can you maybe share some light on this?
I think a first of a kind is basically at the transition between venture case and infrastructure case. So especially hardware startups, when they are building out their first unit at scale, where there's still some risk involved, this is basically the first of a kind. And there's been quite a few problems with this, because for a venture capital firm, it's oftentimes unattractive to fund this, because you basically get debt level returns for equity level risk. But also for infrastructure capital, this has been sort of a difficult thing to navigate, because they get significantly higher risk when they could also be funding all the already proven out technologies. So I think FOAK financing is something where government plays a huge role, and something where you need, in essence, a blended approach of financial instruments.
Mm-hmm. So the capital stack and the capital formation for a startup at the FOAK level, or any hardware tech level, is crucial. So you have to be quite smart to kind of navigate on this course.
Exactly.
Ronnie, what capital stack should you leverage when aiming to build something truly novel?
Yeah, I mean, it's a good question. I think we're in a very interesting period when it comes to first of a kind. There's a couple tailwinds that I think are important to call out. I think one is the macro environment we're in, right? I think if you look 5, 6 years ago, and we have sort of scaled examples of large climate companies, Climeworks, for example, in Europe, that are quite developed, how did those get financed, right, is always the question. And they were an example of raising a lot of equity on their balance sheet at the corporate level, and then later at the project level to go and execute some of their early sort of deployments. But the environment for that's changed, and what changed was the cost of capital went up. And so for people like venture investors who are already quite unfamiliar with funding infrastructure, you've added another level of risk to that is already overstretching their sort of competency level. So I think that's an important change that's happened in the market. And then we sort of talked about how project level infrastructure financing folks typically don't like to come down too early until things are more in a box around risk. I think the other thing is, obviously, there are scaled solutions in the market at a sector level, right? So you have solar, you have wind, you have batteries. They're being deployed at gigawatt scale now, have very strong sort of financing parameters around them. But there's like this emerging long tail now. There's nuclear, there's geothermal, there's hydrogen, and all of those have very different cost considerations. All of those have very different founders, different buyers, different sites requirements. And so it's very hard to give a blanket answer of what you need to do or leverage because of the differences in all of these approaches. I think what the answer ends up being is you have to be creative, right? I know that's probably not the best way to start this, but that's the reality, is there are capital sources out there, and depending on your approach and what you can leverage, and we can get into this more specifically, I do think that founders today have to be incredibly creative, because equity does not want to take an extra level of risk, especially in this macro environment, and it's still very unclear who the hybrid or early stage project financing partners are who are going to come more upstream to take first of a kind risk. So that's sort of how I would encapsulate the sort of challenge here.
Mm-hmm. The challenge is definitely big, because if you look at, for example, cleantech, and regard cleantech as simply reindustrializing our current economies, meaning that we do have to improve efficiency, increase energy efficiency, and alternative energy sources have to be taken into use, etc., then we are talking about changing the industry as is today. So, Jan, what actually motivates the VCs to invest in industrialization or reindustrialization?
That's a great question. I think it's 3 points that I would make. I think the first point is that there have been very successful exits in the hardware climate tech space. when you look at companies like Tesla or even H2 Green Steel as a European example. But also in our portfolio, you mentioned Capitalised, for example, which, full disclosure, is a portfolio company of ours. You see that climate tech startups can reach a significant amount of traction. I think the second point that I would make is that compared to software startups, for instance, hardware startups tend to have a wider moat, because if you're a company that has real assets and is dealing with stuff, the defensibility of it is just generally higher. And the third point that I would mention is government support. I mean, I think you can't highlight enough how important the role, especially for FOAK financing, is, where you have, as you mentioned, a great creative pool of capital, which is growth equity, venture debt, and especially the non-dilutive part, I think, plays a crucial role in that. And these government supporting trends, and I'm including carbon pricing in that as well, I think are not going anywhere. And I think this, for us at least, creates a big appetite to invest in hardware climate tech startups.
Mm-hmm. All right. And then we come to the point that, does it work? Is it actually working, or how long has it been working without us noticing it? Because we have been doing the industry level investments for many years, for a long time. But why now? Why is the time now to introduce the first of a kind, bring in the VCs, share it also with grant funding? So I assume mostly in the first of a kind projects it's 50-50, meaning 50% grants, 50% equity, more or less. Mm. Is it a trend?
Well, I think the companies that we invest in, which is early stage climate tech startups, they only make their impact when they become infrastructure. Yeah? Mm. And I think the urgency obviously is at hand. And the asset class, I do think is a young one. I think cleantech 1.0 left some people very scarred, and now there's, I think, a new wave, and I think we also have a responsibility to make this asset class a successful one, because I think the planet just needs it. So the time is now, for sure. Yeah.
Mm-hmm. Ivan, today in the morning you had a meeting with a few Estonian entrepreneurs as well. Have these meetings been taking place before as well? Is it a kind of a new voice channel from the innovators towards the Commission and the local governments demanding for more subsidies, grant funding?
I would say it's a constant dialogue that we're having. So it's indeed this iterative process between, providing the clarity as to where we're going. We're not changing the course. The carbon pricing will stay. Yes, it needs to happen. Yes, it all needs to be scaled up because we need to enhance our emission reductions and get ready for, increasing climate impacts also from the climate change, because, mitigation will take time before it really starts, ensuring that we don't have worse climate effects and temperature going up. But so this dialogue is there. I think what I really, at least my impression here, is that what is so great is that you are all, trying it, making it happen, and then of course you need the investors with you and the stable regulatory framework. As I said, I briefly mentioned the Innovation Fund. For the Innovation Fund, we look at different technologies. It needs to be first of a kind, but demonstration, not just on paper in research form. So we're having also, of course, at European level, a big fund for research and development, but then when a technology is ready or a project is ready for first of a kind demonstration, there is this option to put in public money. And then, of course, any person who wants to apply to this fund will need to bring in private investment as well. Can be the company itself, can be other private investors. So at that, I would agree with you, Ronnie, is a little bit complex. But I think from our perspective, it is all about, yes, this is worthwhile. This is the new economy. We're not going to change track. We're not going to change course. This is about competitiveness and growth in Europe, and let's be in the lead.
And the capital availability in this sense. Do we have enough capital to actually reach the set targets by 2050, for example? That might be a question to...
Yeah, but definitely not enough public capital. Because also, yes, the climate transition and the clean energy transition and the digital transition is a clear imperative, but for different circumstances, we also have many other imperatives in Europe, not least on the defense side right now. So I think public money will never, be enough. That's also clear, and that's where we need to target very well how we use the public money as seed money to de-risk, to take off that most risky part of the investment, but then to combine it with other, investors who can also play their role. So yeah, I think it's not, this morning again, I heard it's not really capital per se that is lacking, but it's how to bring it together and how to build the business case with sufficient certainty and outlook that it can really, start to become viable and be scaled up. Yeah.
Maybe if I could add to that really quick, I do think that capital is not per se the scarce resource. Especially at the early stage. However, we do see what we call the Series B funding gap sometimes, which is that especially in the later stages, you see slightly more scarcity of capital. And especially in climate tech, where you're doing hardware-intensive things, companies with stuff, founders dilution tends to be a topic that is much more an issue. So I think we do also really need the support from governments and the
I do agree, but it will not be all.
Exactly. Yeah.
I think if I would add on to both points, I do agree with Yvonne. I think it is generally about how to mobilize and allocate, and I think the ceiling there is figuring out what everyone's objective is, right? So there's philanthropic capital, there's government capital. Does government capital expect some sort of return on that money, right? That's a big question. And certainly in the US, the most cited program is the DOE Loans Program Office. And they're very, very, very upfront about saying, we're not giving away money for free. And they're a government program. And so it's understanding what everyone's role is, what their objective is, so we can unlock that mobility of capital. In regards to the funding gap, I mean, that's the purpose of why we're here, is there's a gap in who's going to step forward. I don't believe it's because the capital isn't there. I think it is because it is unclear who's going to step in. It's actually one of the most interesting trends. If you look at the level of infrastructure capital that's being raised and sitting on the sidelines from funds that are amorphous, so BlackRocks of the world, Temaseks of the world, I mean, we're talking about a lot of dry powder that's sitting there, but they're just not, they're looking at their objectives on risk return, on a risk-adjusted basis. This just doesn't fit that profile. And so that's the question we need to answer, is who is going to step forward, and how do we figure out how to mobilize some of the actors to move outside their comfort zone to a degree, but also just communicate that to the market, right? Because there are entrepreneurs who are sitting there, and there's a lot of opaqueness about who those folks are, what their objectives are. And so I think, if there's one thing that I would make clear is that, venture, one of the things is we look at early stage businesses, we look at technology businesses, but it's also the return profile that we're looking for. Jan said something really interesting earlier about debt level returns, but equity like risk.
Yes.
That is, if I had to look at sort of one line to put forward to you about why equity investors, venture investors are hesitant to invest in assets like first of a kind, or at least at that stage, that's one of them. On a risk-adjusted basis, it just doesn't make as much sense. So us as investors, where we like to get involved is obviously as early as possible and supporting companies as they get towards that and navigating that. But we do have to see that there is disproportionate upside in these businesses. And so using a word that Jan used again, moat. And so those are two of the things that I think are very important. Our role here is not really to change the way that we think about returns, step into markets that are out of our competency level, because when you do that, that's when you get the climate tech 1.0 type dynamic, where you have a bunch of venture investors making infrastructure-related investments that they don't understand, and you create this bubble effect, which means effectively it's not going to be a good thing for founders and companies at the end of a cycle.
And then if we're now looking at from the investor side and policy side, but looking at the entrepreneurials themselves, maybe it's a first question to Ronnie. How do you convince the potential customers or investors or other credit facilities in your bankability as a founder? Because, I mean, if you start building your product or your service, you don't have users or revenue to show your traction. You have to build something physical that kind of has results in the future somewhere.
100%. I mean, this is a very important question. I think there are a couple ways that founders can do it, and certainly successful examples in our portfolio have done it. I think the first thing is let's just stick with first principles. You have to understand and validate that what you're selling or building is what customers want. And I think one of the mistakes that I've seen a few deep tech founders make is they look at the market sizing, they look at sort of general tailwinds, and then they said, build it, and then they will come. I don't think that's the best way to do this. I think you need to figure out a way to be in constant dialogue, iterative, constant dialogue with your customers to continue to figure out if this is valuable for them and they're going to pay for this. That's the first level, absolute table stakes. And I think we've seen in the gap between being early, pre-MVP, benchtop scale to first of a kind, there are a bunch of other steps there too, technology demonstration steps that I think are a great way to engage your customers, great way to get them interested, and frankly, at least from what I've seen, enough to get early buyer interest. Because at the end of the day, a debt investor, one of the biggest prerequisites is going to be, is there somebody who's going to buy this at the end of it, and are they willing to sign a fixed price, fixed volume, long-term contract to guarantee those revenues? And so if I were a founder, I think focusing on the customer is the imperative, and then figuring out in the context of my technology, again, there's so many different examples, geothermal, hydrogen, et cetera, like what are the different technological inflection points where we can build something that is a step change and demonstrating that this will work and that we can produce said end output or product that you can show these customers to get them engaged early.
If I can add one point to that, perhaps I think what's also really important, and companies such as H2 Green Steel in Europe have demonstrated this very successfully, is this idea of pre-selling your capacity. It's this idea of Tesla-style pre-orders, which we, for instance, implemented with one of our portfolio companies in the bioenergy space called Reverion, where they basically got 2 million euros in pre-orders, and this, I think, gives banks and debt givers a lot greater degree of comfort when looking at funding hardware.
Mm-hmm. And then, for example, Jan, you have specific criteria as well when you assess the founders, assess the startups. Most probably you do have, otherwise you wouldn't be that good in what you do. So what's the main criteria? Or the main criterias?
I mean, at Extantia, we're very particular at the type of deals that we look. I mean, we do have something that we call the carbon math methodology. Mm-hmm. This means we have a threshold for every company that we invest into of 100 megatons of CO2 equivalents per annum at scale that every company that we invest into should be able to abate. So we are sort of using carbon abatement potential as a predictor for future financial return. And by the way, I think this is also why carbon pricing is such an important factor in our investment thesis. So this is definitely an area that we look for. And then, of course, do you make a product that people want? Yeah? I think that's always the most important one.
Mm-hmm. And do you see, for example, the European Commission from their side, from the public policy side, how does it support the FOAK projects directly?
Well, I think it's very much what Ronnie was saying. I mean, we're trying to indeed provide this predictability, which should translate into demand, right? I mean, people know that they will need to move away from fossil fuels. They'll need to move into low carbon solutions, green energy, but also digital solutions, etc. There can be very specific uptake demands, for example, for sustainable aviation fuels. We have like mandates in the legislation. But I think more generally, it's at a higher level. It's to say, yes, we're moving towards low carbon solutions. And that can then indeed be used, because I thought it was very interesting what you said, Jan, this methodology, because, for example, how we disperse the money in the innovation fund, which is, we call it the largest scale, demonstration fund in the world for low carbon solutions, has 40 billion. We estimate around 40 billion because it's based on ETS allowances being sold, so it's kind of linked. But we have a methodology also there that looks at, what is the carbon reduction potential, and we also then hand out the money. But I mean, the money is limited, so the best projects get funded. And this is, as I said, technical and financial viability, but also how much carbon can be reduced potentially. We look at, it's very good if a project can also show that the demand side has been taken into account. So, for example, 3 weeks ago, we could release the results of our first ever green hydrogen auction. It was 15 times, I think, oversubscribed. We could only award so many projects, but there was often already the demand side incorporated in that project as well, which of course makes that you have a better bid and a cheaper bid, which makes you come out on top. Now, I just want to emphasize also here, it's not if you haven't been awarded in that particular auction, which is OPEX also, it provides this fixed premium over 10 years. Yep. So we're in constant dialogue with the sectors, be it green hydrogen, the next big call, or not only the next big, but one of the big ones we're going to be doing later in the year is on batteries. We're looking with the sector what is needed, but it's then about blending the finance so that you get a good bid. And the added value of doing it at EU level is that you get a very competitive bid, so it's a low-cost price for the consumers in the end, where this taxpayers' money is going. But what I wanted to emphasize as well is that if you are not part of those awarded with EU-level money, we have now created the option for member states to use the outcome of that auction to then use their own national funding and to get it cleared from a state aid perspective in one go. So we're really trying in the best possible way that we can to facilitate things and to help scale up, first-of-a-kind solutions.
So there is a very strong cross-sectoral collaboration, actually, that we're seeing here. Right? So from one side, you have the public awareness, the policy, the regulations that push the governments, the local governments, but also corporates to be more sustainable. Use more efficient methods, more natural raw material, virgin materials, and that again translates into orders for innovation.
Yeah. And maybe if you allow me one more thing, we're doing it from all kinds of angles. So the financials, for example, we're also asking them to look at, what their portfolio contains. We're trying to indicate, what would be the green investments, what is your financial risk in terms of potentially stranded assets in the future, looking at the carbon price, etc. So, we're kind of tackling it from all kinds of different angles to really make clear to big companies, look, this is the future. This is where the growth is. We're not going to stick into the old economy, fossil-based economy. So I hope that, for investors, this package of policy measures, rules, so legislation and financial support will make them go there.
That's beautiful. That leads us to a very good point of saying that our prediction on what would we be talking next year on the stage about the same topic. I'll start with Ronnie.
I think we're going to be talking about hopefully some successful examples, because there are a handful of companies who have announced projects, and hopefully those become live, they become referenceable for folks across the capital stack. So I'm hopeful that the tone next year is going to be a lot more exciting, because it comes less about who's doing this to more, there's things being done, how can we do more?
So the narrative is going to change from this is tough, this is difficult. It's actually doable. You have front runners, you have success stories. That shows a great example. Yvonne?
Yeah, no, I hope that would be the case. We met with some of the startups and the technology inventors, I would say, already this morning. And I hadn't taken away from that so much the fact that it's tough and it's complex. The impression I went away with was already very much like, this is happening and we're doing it. But it's true that then to scale up, that is, of course, the challenge, but it's super good, the people you have on the panel. So I think, there's ample interest. And if we can scale up these technologies, which is all about, again, also helping our independence in Europe, getting more independent from, energy supply from abroad, which has its risks, to showcase that the low carbon future is the best possible, resilient also in terms of security and independence is the way forward. So I hope next year we will see these technologies really being picked up and people testing also the blending of the different instruments. But I think, like you said, Ronnie, we're still at this stage where the big investors need to see, yes, this is where we want to go, and they need to step up to the plate also, because there's a lot of positive narrative about the climate transition, but then please also act accordingly. And I think a big challenge is also with shareholders. The return on investment is always very short-term still, but people need to look beyond. What do we want as citizens? What do we want as consumers? We want this safe, livable future and a livable planet, but that means we need to change, on the one hand, our behavior, but also our investments and the technologies we use.
The thing with hardware is that it takes time. So I'm not sure how much change we will see by next year, but hopefully in 10 years, I hope that we will indeed have seen a bunch of successful examples, and yeah, that basically we can also achieve this through dedicated vehicles. I think this is something that's also emerging a little bit, which is particularly focused FOAK funds that combine different mechanisms of financing, and hopefully in 10 years then, yeah, we might have some climate impact with that.
Excellent. Thank you so much, Ronnie, Yvonne, and Jan. Ladies and gentlemen, thank you for tuning in. Enjoy Latitude59, and remember that the future is going to be fucking awesome. Thank you.
Okay.